Welcome to our first inaugural episode of Aliyah Money Talks. I'm thrilled to have here Yosefa Huber, a U.S. CPA specializing in expat tax and tax for Americans living in Israel, Americans living all over the world. Yosefa, why don't you introduce yourself and tell us a little bit more about what you do?
Thanks so much for having me. I file mostly individual taxes for U.S. citizens, mostly living in Israel. My specialty is individual taxation with some sort of an international component.
Got it. Great. So there's definitely a lot of Olim that get on a plane. They move to Israel and they assume, all right, I left America. I am done with the IRS. Is that true?
Don't we wish?
Who needs to report their income to the IRS?
You should probably assume if you're not homeless, you need to report something. That's kind of in general. There's two general things that you need to report. One is a tax return, which you've probably seen before if you've been working. And the other one is called an FBAR, FBAR, and that reports your accounts. So if you have any income from anywhere in the world, you are going to have to file a tax return, even if it's below, depending on the threshold. If you think your income is below certain thresholds, you should speak with a professional because there's a lot of misunderstanding about those thresholds. So you should probably assume that you need to report something.
Does that necessarily mean you'll have to pay taxes?
No, it doesn't. It doesn't. Most people are not paying taxes. If you've heard about various reasons, like a lot of people misunderstand because they hear there's a tax treaty or they hear if my income is under $105,000, I don't have to file. But you actually need to file. Most of the time you're filing to show the IRS the reasons you don't need to pay. So you have to report all your income. And then in addition, after reporting all your income on the same form, then you can report your credits or your exemptions or your refunds and things like that. Most of my clients are getting refunds. So for them, it's a bonus. I'm not saying that most people would rather not have any of it to deal with at all, but there's a good chance you'll still be eligible for refunds.
And this is specifically an American privilege, or do people from other countries have to report back to their home?
Yeah. So privilege is a very lovely euphemism. The U.S., the United States, and Eritrea are the only countries in the world that have worldwide taxation, regardless of residency. The U.S. is the only one where other countries are willing to help them enforce it. So it's definitely unique. So people that grew up in other countries but might have U.S. citizenship often don't realize because they had no reason to think about taxes for many reasons. They might never have had to think about taxes before, but the U.S. actually expects them to report their worldwide income.
Right. So we're talking about somebody who was born here.
Mm-hmm. Here being Israel.
Never here in Israel. Never, spent any time in America. Maybe never even visited there. Yeah. They still got to report their income.
Yeah, even
right?
if they don't have a social security number or a passport, it's possible that they're considered to have U.S. citizenship. And it's tricky because if you're eligible for U.S. citizenship, for automatic U.S. citizenship because your parents are American, then you aren't legally allowed to get a visa. Your only option really is to get a U.S. passport. And so if you go through life without ever registering with a social security number, usually it just comes back to bite you because you need it and you can't get an appointment at the embassy. So I generally recommend that if you're eligible for it because you're considered to be, or your children are considered to be a U.S. citizen by default, you just go ahead and register them as soon as possible so you can get all the benefits.
Great. So you touched on the FBAR. Mm-hmm. Who would be required to file an FBAR and who would probably be exempt?
Okay. So in order to figure out if you need to file an FBAR, you want to look at all your accounts that are outside the U.S. So if you're living in Israel, most of my clients have accounts just in Israel and the U.S. So you look at all your Israeli accounts and you look for the highest balance in each account during the year and you add all of those together. So if the highest balance in all the accounts added together is over $10,000, that's based on the year-end exchange rate. So if you're looking at 2021, that's going to be if the total is over $30,990. Shekels, excuse me.
Right.
It's 3.099 is the exchange rate.
99, right, yeah.
Then you'll need to file an FBAR. And once you meet the requirement to file, you must include all accounts outside the U.S. So even your 13 shekels that's stuck in some old pension plan, whatever it is. And you also need to include accounts where you have signature authority. So, if you have signature authority, power of attorney, something like that on a parent's account or kid's account, a spouse's account, you include
a Vad Bayit account.
Vad Bayit account.
Would be an example.
Yeah. Gone account, whatever it is. You have to include 100% of that account, 100% of any joint accounts. So it has nothing to do with your net worth. I kind of think of it as the maximum amount of money a U.S. citizen could touch during the year, potentially.
And it's anytime throughout the year where the money passed through, if it was going, to pay Israeli taxes, for example, and it was literally transferring to your Israeli account for one day, that would still...
For even an hour. It doesn't matter why you have it. Your neighbor could say, hey, hold this 1,000,000 shekels, hold this, 30,000 shekels for me for a few minutes in your account, and then send it to me. You're going to need an FBAR.
And if you have a Bank Leumi account, let's say, with a bunch of different deposits, daily deposit, a yearly deposit, each one of those would be reported separately as separate accounts?
Better to speak with your accountant, but generally, unless it's investments, like securities, usually we lump them together. But you want to make sure that you're really reporting the highest balance. And, if it's hard to find the exact highest balance, just take the highest in your checking plus your highest in each deposit and just add them all together, even if you never had that amount. That's usually how we do it.
Great. So now I think we're going to pivot to everybody's favorite tax topic, at least living in Israel. I think it's the number one topic on every expat group on Facebook, which is PFICs. Mm-hmm. What are they? In a nutshell, what should we look out for?
Okay, I'm going to squeeze it into as small of a nutshell as I can, and then I think we'll discuss this more in the future. PFIC stands for Passive Foreign Investment Company. So breaking that down, we'll start with foreign. If it's a U.S.-based company, like a U.S.-based mutual fund, it's incorporated in the U.S., they send you a 1099, that's not a PFIC. If it's anywhere else in the world outside the U.S., that the mutual fund or the ETF or whatever sort of a fund or company you've invested in is based outside the U.S., that's going to meet the requirement to be foreign. And then the second requirement is passive. So in short, if it's for investments, it's probably, you're probably dealing with a PFIC. So it's a bunch of investments lumped together, or at least more than one investment lumped together into usually some sort of a fund that is for passive income. So they're not making a product or a service, it's investments, and it's outside the U.S. So your foreign mutual funds, in Hebrew, Kranot Namanut, your Tudot Sal, your Kupat Gamal Lahashka'a, those would all be PFICs because it's a bunch of investments put together into, we'll call it company, for investment purposes. And
perfect. Yeah. I mean, I think there's a ton more to talk about in PFICs. We'll definitely get to that. I'd love to do a future episode just focusing on that issue. Similar in that vein, I've heard from different people that are working as atzmaim, and they're worried about the PFIC issue, about contributing to some of the tax advantage accounts here in Israel, like the Keren Ishtalmut, something like that. And to avoid the PFIC issue, they want to, the perfect solution could be contributing to an IRA, contributing to, back in the States, contributing to a Roth IRA, contributing to a regular traditional IRA. What are things to look at? As far as contributing specifically to an IRA?
Okay. So the first step really should be to speak with your accountant, because there's so many moving parts to weigh between should you open a Keren Ishtalmut, what are the risks there versus the risk of the IRA, things like that. But number one requirement to invest in something like an IRA is that you must have taxable earned income. So let's say you have no children and you're using the foreign earned income exclusion. So you're telling the IRS the first, depends on each year, about $107,000 of your income is exempt. Your earned income is exempt from U.S. taxes. You're not going to have any earned income left to calculate your maximum or your maximum IRA contribution. So basically, if you're using the earned income exclusion, and then there's a really high chance you're not going to be eligible at all. And if you choose to use the exclusion, you must use it on all eligible income. Okay. Sometimes I see people think they're real smart and they leave some minimum amount of their income out.
$6,000 off, right?
Can't do that. That's not.
Can't do that. Good. Perfect. Okay. On to the next issue. Also really pertaining to Atzmaim, people that are self-employed. Social Security tax. Mm-hmm. Who needs to watch out for it, and what is it, and why should an Atzmai know about it?
So Social Security tax is made up of self-employment tax is made up of Social Security and Medicare. The bulk of it is Social Security. Most people I speak with would rather not be putting into Social Security and would rather have the money in their pocket, especially since in Israel requires you to contribute to a number of retirement savings things. So assuming you don't want to be funding your Social Security for retirement, if you are self-employed, you would be subject to this. So sometimes people think, oh, there's a tax treaty, there's no double taxation, but the Social Security is separate from that. So there is no what we call a totalization agreement between the U.S. and Israel when it comes to Social Security. So even though you don't have double taxation on income tax, if you're self-employed, that's Osek Pator, Osek Morshe, you should budget close to 15% of all your profit towards your self-employment taxes. And that's in addition to your Bituach Leumi.
So that could end up being a big chunk of your salary.
Can be. It can. So for people who come here and let's say they already have been working for 9 years in the U.S., they might want to be finishing up and getting their 40 credits, which takes minimum of 10 years, in order that when they retire, they can get Social Security. But I think most Olim would rather have the money in their pocket, especially if they're young and they can always put in more time later. So it's worth speaking to an accountant who specializes in working with people in Israel and see what options might be available for your specific type of company and the amount of income that you're earning to see if you can, if there's any planning that you can do. But sometimes the best planning is just to make sure you're recording all your expenses to reduce your profit, your taxable income as much as possible. Right.
I mean, it's an important point that when you're paying into Social Security, there may be an advantage down the line that it's not completely lost money.
So, for example, one of the ways that U.S. citizens can get out of paying Social Security is if they are an employee of an Israeli or any foreign corporation. So, if somebody would have been self-employed, they might choose to incorporate their business. And then instead of being self-employed, they are an owner of an Israeli company and they're an employee of an Israeli company. So they're no longer self-employed. But you're going to spend a lot more money on accounting fees if you do that. So if the bottom line comes out very similar, Social Security tax versus your accounting fees, would you rather be funding my retirement or your retirement? So when the numbers are close, I generally lean towards people just staying self-employed because hopefully they'll eventually get Social Security, and it's also just simpler in most cases.
And if someone does go the route of incorporating, what specifically do they have to watch? I mean, they build an Israeli Ba'am, they build an Israeli corporation. Israeli, or what do they have to look out for on the U.S. tax side?
So I think the first step, if they're already using an Israeli accountant, I would say the first step is just to get a price quote from the Israeli accountant, because once you realize how much your Israeli accountant is going to charge you, you might not even need to speak with a U.S. accountant once you realize how much that's going to cost. It can be about 10 times whatever you're already paying, but it varies a lot. So speak with your own Israeli accountant. then you want to speak with your U.S. accountant. You must be using a U.S. accountant who specializes in international taxation, and preferably someone in Israel who can read Hebrew, because your financial statements are going to be in Hebrew. But you want to watch out for something called GILTI tax, GILTI. I think they were just sitting in a room and trying to find a fun acronym, because the words have very little logical connection to what it's actually taxing. But basically, if you leave any profit in the company, in your company, you could be hit with that. So it's definitely avoidable, but it's something you have to plan for. So you can't just open a corporation because somebody online said it was a good idea and not have an accountant who's there to help guide you and tell you how to minimize your taxes. And then the other things to watch out for are just, you're going to have a jump in accounting fees on both US and Israel side. And on the US side, if your tax return is late or it's missing any of the schedules and forms required to report that foreign company, you get an automatic $10,000 penalty. And they really do send those out. It's not like the FBARs. You know, the FBARs also can have a $10,000 penalty, but as long as you write a nice excuse letter and you file it before they catch you, we don't see those very often. But the penalties for having a foreign corporation, if your tax return is 1 day late, if you even send it, let's say you send it with the Israel Post instead of one of the approved private delivery services, and it gets there a day late, you'll just get a letter for $10,000 penalty. So you have that risk as well. Sometimes people can save money having a corporation, but they just aren't really organized enough to risk that and be able to file on time, so it's just better not to.
You really need to check all the boxes if you're going to go that direction.
Yeah.
Perfect. Okay, so moving back to the individual, we're looking at somebody who gets married in Israel, right? They're American, but they get married in Israel. They don't file any sort of marriage certificate in America. Are they married for tax purposes?
Absolutely.
Okay.
And if you're trying to do your own taxes, and let's say you get married to somebody who's only Israeli, not U.S., you didn't tell the U.S. you're married, the U.S. has no idea you got married. If you're not single, you must file. You have 2 filing status options. If you don't have kids, you have to use married filing separately, or married filing jointly, but that's very rarely beneficial. So I see so many different mistakes with that.
What's rarely beneficial?
To file jointly, excuse me. So if you are not single, you cannot file as single. You can file as married filing separately, which is the default, married filing jointly, which is rarely beneficial, or head of household, which is if you have children and you financially support your household at least 50%. So the default is married filing separately. And I see so many different mistakes coming from this. I see people who think they can't file married filing separately because their spouse doesn't have a social security number, and then they end up just filing as single, which is fraudulent. Don't do that. Or they think they need to file jointly, and I see this so many times, and they get their spouse taxpayer ID, which usually takes them 3 tries because the IRS knows they're not supposed to get it and tries to reject it, and they eventually get it for some reason. And then they file with their spouse, which is also, there's so many reasons that I don't want to say it's wrong, but it's something that you shouldn't go into lightly. It's something you need to discuss with a professional who can explain all the consequences to your non-U.S. citizen spouse. I personally will not add a spouse to a joint tax return unless they fully understand what they're getting into.
Got it. Another common mistake we spoke about is the earned income tax credit. You move to Israel, you're living in Israel. Can you benefit from this credit?
In most cases, no. January 28th is actually Earned Income Tax Credit Awareness Day. Just learned that this morning.
Special holiday.
Yes.
Put that on your calendar. Okay.
So I don't know if people are going to start seeing on Facebook or anything. And the other thing is that if people, start from the beginning. The only reason you would be eligible for the Earned Income Tax Credit, there's a number of requirements, but the number one requirement is that you have to have lived in the U.S. at least 6 months. of the given calendar year. If you haven't lived if you're a resident of Israel, for years, it's not relevant for you, and there's no reason to talk about the other requirements. So most people that I work with are not eligible. There are also income requirements and children requirements and things like that. But if you use a U.S. mailing address, which isn't illegal in my opinion, and you're making under certain income thresholds, the IRS computers, they don't look at your whole tax return. They don't think and realize you live abroad. They're just looking at your address and your amount of income, and they'll send you a letter saying, hey, we think you might be eligible for a few more $1,000s. If you just read the letter, you'll eventually get to the part that says, that do you live in the U.S.? But if you don't read the letter, then you'll think your accountant did something wrong. So read the letter. But yeah, in general, you're not eligible.
Okay. Now, an average person who is an employee of an Israeli company working here in Israel gets at the end of the year the TOFAS 106. What should they be looking for? Is that an easy thing to translate right into their U.S. tax return using software or something like that?
I mean, there's a lot of things going on in the 106 that most people are not trained to understand. So, I mean, you probably figured out by now that I have a strong opinions about the benefits of using a professional accountant. Things like your employer contributions to your funds, and those have sensitive reporting requirements that it's important to understand. Requirements change a lot. The worst mistakes that my colleagues and I see is people that think they can go to accountant once, or their accountant retires and they just think they can copy the same tax return each year. The tax laws and the forms have just changed so significantly every single year since 2018. There have been such significant changes, and you can miss those, and you can end up with pretty serious penalties if you miss a form here or there. So with the 106, first of all, there's generally no reason to attach it to your tax return. In most cases, there's no reason to translate it. If you're using an accountant who can't read it and they're saying, can you just tell me how much you made? I would consider that a red flag, because it's not your job to understand what's taxable on your 106. It's your accountant's job. And there are so many accountants in Israel that to be using somebody who can't read your 106, I have serious concerns about what else they could be missing. So usually the way that it would work is you send your 106 to your accountant, the annual wage statement, which you get sometime around March of the following year. You send that to your U.S. accountant, hopefully a professional CPA or EA in Israel, and they read it and they know what's taxable, and they convert it to shekels. Dollars. You don't have to convert it to dollars. You shouldn't have to translate it. The only time it needs to be translated is if the IRS requests it, which is pretty rare. I don't think I've seen any in years, but that's because I attach my own sort of a detailed explanation of foreign earned income to the tax return, and I think that usually preempts them asking for a translation.
Got it. Okay, and the Form 8938, what is it, who needs it, and why? So
it's sometimes referred to, as the FATCA form, FATCA, because it did come around because of part of that law, part of that act. It's very similar to the FBAR. It reports very similar information as your FBAR, but it goes with your tax return. It has to be filed along with your tax return, same due dates and everything, and the thresholds for that are higher. So you gather all the information that you need to do your FBAR, and you look at the total of the highest balances for the whole year. If that's over $300, or if the year-end balances are over $200 for single people living abroad, then you also need this additional form. There's actually I have a whole grid of thresholds for different situations, but that's kind of a general rule of thumb. I would say if your highest balance is over 200, get more information. But that's one reason why your accountant might ask you for your FBAR, or they might ask for documents that would otherwise be needed only for your FBAR. They need to check if that's relevant. And that also carries a $10,000 penalty for not filing it. So pretty important to keep an eye on that.
And do you find that most people can do the FBAR by themselves?
Yeah. So I equate it just like, anything else that you could do yourself that you pay somebody to do. You get self-service gas, or you pay someone to clean your house or to clean your car. If you don't want to do it, it gives you an icky feeling and you can afford to pay your accountant to do it, go for it. If you need to save money and you're relatively number savvy, computer savvy, using Excel doesn't give you heart palpitations, you can do it yourself. But if you have a lot of accounts and you need the Form 8938, sometimes it's just worthwhile to pay the accountant to do it, or if it just makes you stressed out. If you're not getting it done on time, if there's a chance you're going to file late, if you are having trouble gathering the information, if it's just really stressing you out, really would recommend paying an accountant, because you might be paying an accountant, between 300 and 600 shekels. And filing it late could result in a $10,000 penalty. So, definitely something you can do yourself. I have information on my website about going through it. I have a spreadsheet you can download. If you want to do it yourself, read all the directions, do it carefully. I see a lot of silly mistakes, but it's not something that requires accounting experience. You just has to not freak you out.
Got it. Thank you so much for sharing all this information. Where can people find out more about you, about what you're doing? Where can people follow you?
Thank you so much for having me. Well, they can get lots of information on your site, actually, on the master list for Olim. You've linked to a lot of useful
You've shared
things.
A lot of your stuff. Yeah,
yes,
you really
I appreciate
put
that.
out great information.
Yeah. So my website is hubertaxcpa.com. Huber, H-U-B as in boy, E-R-T-A-X-C-P-A.com. I also have a YouTube channel. It's YouTube/C/HuberTax.
Great. I'll make sure to link to that in the show notes. Thank you, everybody, for joining us. We really appreciate it.
Thanks so much for having me.